So, Devon Energy just dropped some major news that's sending ripples through the U.S. shale industry. Yeah, they had a strong Q4 earnings report, but the real story here is a massive, game-changing merger that's set to create a new energy giant. So today, we're going to break down the performance that made this huge bet possible, the strategy behind it, and what it all means for the future of American energy.
And this quote from Devon CEO Clay Gaspar, it really says it all. He's not just talking about getting bigger, he's talking about a fundamental shift in strategy. So what's the plan exactly?
All right, here's the game plan for today. We're going to start with the merger itself. Then we'll dig into the numbers that are really driving this whole thing. After that, we'll look at their secret sauce for success, see how it all pays off for shareholders, and then we'll look ahead to what's next.
Okay, first up, the big one. We're talking about a merger so significant, it's basically creating a new giant on the energy map.
So here's the deal. It's an all-stock merger with Coterra Energy. And when this is all said and done, the new combined company will be one of the biggest shale operators in the entire world. But the crucial part is this. They'll have a dominant position right in the heart of the Delaware Basin. And we're talking about some of the absolute best, most cost-effective oil territory in North America.
Okay, so why do a merger like this? Well, it all boils down to one simple but super powerful word: synergy. Basically, it's the idea that 1 + 1 = 3. By joining forces, streamlining everything, and cutting out the costs they both used to have, the new company can be way more efficient and profitable than the two could ever have been apart.
And look, for Devon, this isn't just some corporate buzzword. They've put a number on it, a huge one. The company is targeting $1 billion in annual cost savings from this merger by 2027. That's the billion-dollar reason behind this entire deal.
So you might be asking, what gives them the confidence to pull off a move this big? Well, to get that, you've got to look under the hood at their recent performance, which honestly has been incredible.
I mean, just look at the scorecard for Q4. They edged out expectations on earnings per share, but on revenue, they didn't just beat it, they absolutely blew it out of the water. This isn't just a company that's meeting its goals, it's firing on all cylinders.
And that strong performance translates directly into cash. Cold, hard cash. The company churned out over $700 million in free cash flow in just the last 3 months of the year. Think of it this way. That's the pure profit left over after paying for everything. It's a massive sign of a company's financial health.
And if you think that's impressive, just wait. When you zoom out and look at the whole year, that number just explodes to $3.1 billion in free cash flow. This is the kind of financial firepower you need to make giant moves like a merger.
Now, this number might look a little technical, but trust me, it's so important for understanding their long-term health. 193% reserve replacement rate basically means that for every single barrel of oil and gas they produced last year, they found or bought nearly 2 new barrels to replace it. That signals a really sustainable, growing future for their main business.
All right, so we've seen the numbers and they're seriously impressive. But the big question is how? How are they pulling this off? Let's dive into what Devon calls their secret sauce.
The question's simple, but the answer shows a really disciplined strategy that, honestly, goes way beyond just this merger. It's all about what they're doing inside the company.
A huge piece of this puzzle is their internal business optimization program. And get this is totally separate from the merger savings we talked about earlier. This is an internal push to find $1 billion in sustainable free cash flow. And in less than a year, they've already hit 85% of that goal. That's just incredible. And they're not just doing one thing, they're attacking this from every angle. We're talking over 100 different projects all running at once. They're using things like AI and advanced data analytics to squeeze every last drop of efficiency out of their operations. They're speeding up their drilling times. It's all about creating this culture where they're constantly looking for ways to get better. They even said it's no longer just a program, it's just how they work now, every single day.
Okay, so you have all this operational success, all this cash flow, but what does it all mean? Well, it leads to one critical thing: returning more value to the people who own the company, the shareholders. Let's talk about the payoff.
The most direct way you'll see this is with the dividend. After the merger, Devon is planning to hike its fixed quarterly dividend by a huge 31%. I mean, that's a massive vote of confidence from management about the future of the new company.
Oh, but they're not done yet. Not even close. They're also lining up a massive, and I mean massive, new share buyback program worth over $5 billion. And that's another really powerful way to send cash back to investors, right? By buying up their own stock, they reduce the total number of shares out there, which can help push up the price for everybody else.
Okay, so the company is killing it right now, and the merger is set to make them a bigger, meaner, more efficient machine. But what about the future? What's over the horizon?
Well, on their latest earnings call, the leadership team was really clear about this. They're using this position of strength to start thinking about the next decade. And that means looking for opportunities outside of their core business, both overseas and in totally new energy sectors, like geothermal.
And look, this isn't just some vague promise. They're already putting their money where their mouth is. A perfect example of this is their investment in Devon Energy, which is a really cool next-gen geothermal company. Devon now owns about 15% of it. And it just makes so much sense, right? They're taking what they're already world-class at, things like horizontal drilling, and applying it to get a real foothold in the future of energy.
And all of this brings us back to one final, really important question. Is Devon just building a bigger, stronger oil giant? Or are they laying the groundwork to become a true, diversified energy company of the future? The answer to that question isn't just going to define Devon. It could shape the entire U.S. energy landscape for years to come.